The changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
And welcome to the French Workbench Podcast here on a Saturday. We have our usual suspects here in studio. I'm your host, Dan French, streaming live from Las Vegas. And we just want to talk a little bit about what's happening with the markets, what's happening here in Las Vegas. You know this channel, everything Las Vegas. Most real behind-the-scenes information on financing, real estate, money talk, entrepreneurs happening in Las Vegas. And I am your host, Dan French. And I got my co-hosts. And I first want to introduce Mr. Brett Ginny. What's happening, Brett?
Greetings and salutations. How's everyone this Saturday morning?
Dude, what's going on with you, man?
Oh, just trying to keep busy, dude. It's a crazy time right now.
I think the world is just really trying to adapt on a daily basis.
The world is crazy right now, man. The world is gone mad syndrome right now with their mentality. Everybody thinks the car's coming off the rails, and we're just trying to keep it on the tracks, right?
Right.
Dude, so what's going on in your world? You've been out there in the real estate world, in the trenches, you're watching crypto. How's that working out for you?
Crypto's going along the line with the economy, which is
Really?
So yeah, man, like stocks, every day I wake up, I'm like, I don't know which way I'm going to take it in the morning, from my stocks or from my crypto.
Right. I know.
That's true, though. I mean, you got to think I think that right now with the uncertainty that's going on, I think people are just kind of holding back, especially with inflation numbers.
That's exactly what they're doing.
They're saving money, man. They're not doing anything.
And I think we discussed this earlier this week on the phone, which is it's got to run its course, right? So we were going up for so long, and you pay a price for going up for so long. It's called coming back down to earth.
Yeah.
And I think that just like anything, that will be a cycle. We'll probably get to the end of the year, beginning of next year, and I think that people will just be sick and tired of kind of being sick and tired, and they'll just start doing shit again and get going. So,
isn't it weird how the world just shuts down though?
Mm-hmm.
And I understand why.
It's like a whole world vibe.
It's weird. It's like everybody's like, well, everybody else is doing it. Let's just not do anything.
I mean, that's how, especially being in such a globalized world right now, which news of anything can spread, in an instant. So.
Absolutely. You guys know Mr. Doug Liebig. He's Las Vegas Home Inspectors. What's going on, buddy? How are you?
Oh,
home
good.
Inspections. Anything happening?
Glad to see the weather coming down a little bit.
I bet you are. I bet
That's
you are,
man.
man.
That's probably tough for you, right? I mean,
it gets every year it gets a little bit harder, I guess, but so
get
far
a little
so
bit
good.
older. Isn't that funny how that works?
I don't know.
right?
It's like being an NFL player.
Right. Yeah.
It's not, the years don't work for you.
No, right. Yeah. No, it's going good though.
Is it going good? So let's talk a little bit about what we're going to talk with on the show and discuss some of the things. So we all know that the economic standoff is continuing, where you see rates going up and inflation going up. People are on
That's a good way to phrase it.
Yeah.
Economic standoff.
It's an economic
That's exactly
standoff.
what it is right now. It's literally a standoff.
It is.
It's a stare down.
100%.
It's who can blink first.
Right?
Who's going to win?
I'm telling you. And you have the Fed going to raise the Fed's fund rate. We talk about that.
Exactly.
We're going to talk a little bit about what's happening in the housing statistics and data that Brett is seeing here. And also we're going to talk about what's happening with so I want to talk with Doug here about he does a lot of work outside of Las Vegas, the city of Las Vegas. You go to Laughlin a lot, and Pahrump. You go to a lot of these places. So we want to kind of dive into what those markets are like and what some of the homes are like, going in there and taking a look at these home inspections. And we're going to talk a lot about what's happening here with Las Vegas. I want to bring up a couple of things that's going on in Las Vegas, which is right now, you see that Las Vegas and the Aces, right? The Las Vegas Aces, they're in
tonight. Not
women's basketball, right?
Yeah.
It's supposed to what are we, 2-0? Right now, I mean, what is the?
Yeah.
Are we?
And I think we played Thursday night, so
Yeah.
I'm not sure how everything went.
You didn't watch it? You didn't watch it?
Brett's gonna record it. So
Yeah, I already recorded it in my mind because it happened 2 days ago.
right. So, but I mean, listen, man, you got the Las Vegas Aces
Throwing us
Aces.
off.
Las Vegas Aces. Maybe the A's are coming here. The Aces are 2 games away from winning the whole enchilada, right? I mean, they're 2-0. Is that right? I don't watch women's basketball, but is that right?
Well, I think Thursday night was, if they would have won Thursday night, then they won it all. So I don't know. Since this is Saturday.
Anyways, we'll stay tuned on that. We'll catch this thing back up either the
Trying to back us out of a corner, Dan. He keeps on backing us into that shit. I'm like, dude. Woo.
Also, I want to talk about what's happening with mortgage applications. Refi applications are down 83%. We all seen this coming. And also, I want to talk about it's not uncommon now to see the 55 plus community helping out grandkids or just people in general buying into a house. The statistics are up. They're seeing a lot more people that are in the baby boomer era, the 55 plus, are now having to co-sign for people to get into a house. And rates have now surpassed 6%. Again, national average. We haven't seen rates this high since 2008. So let's kind of dive into what's happening with Las Vegas. Anything else happening besides that? The Aces possibly winning the
just we're busy as ever. The city is.
Is it? Yeah.
Yeah.
You feel like it's really thriving right now? How you feel like this thing's?
Yeah, it's full speed ahead for Las Vegas. I mean, I don't know of any slowdown that we've been having or anything like that. So
Just real estate, right?
Just
You
real-
got- you
yeah,
got
just
the
real
Durango
estate.
Durango Station.
yeah, I saw they started tearing that down.
Yeah. Oh yeah, the Fiesta Henderson there. It's coming down.
Yeah.
And
I
then
mean,
you
were
got
you around, Doug,
Durango
when this whole thing was going on with the were you here when they first opened those casinos up? You were.
Yeah. Not Texas, but yeah.
With the one on Texas Station, when did they first open that?
I don't know. I think that was early '90s.
Was it?
Yeah, late '80s.
They tore it
early
down
90s.
already, huh?
Yeah.
What do you remember?
Well, I think they're
What do you
losing.
remember about that?
Oh yeah, that's true.
Just about the construction.
Yeah. What do you remember about just the whole when they
when
first
we-
opened up? I mean, it was probably a huge grand opening for those casinos, right?
Yeah, it was. All of them are huge. They have a big
Huge, yeah.
gala.
Nobody does it like Vegas.
Opening. I know, right?
Yeah.
And nobody actually blows up a building like Vegas either. you
Yeah,
know?
no, we know how to tear
That's a
that
big-
shit down, dude. The style.
That's a big party
Destruction.
too.
We're
yeah.
awesome at it.
It was like every time you turn around, it was on the news. Something was coming
Yeah.
down, and then new ones were going up. So yeah, I did a lot of work on the Strip when the new ones. I had a couple jobs actually on the Strip, the Aria.
How long did that take?
The city center took forever.
Yeah. but
When did they start building that?
Yeah.
2004,
Because I don't think I was here yet.
5.
Yeah, I wasn't for sure.
Well, I can say this. I know it took a while for them to build that, and I think they stopped construction because of the economy at one point, didn't they? I think that's what happened with the Aria and the city center.
But I think that had just been
Fountain Blue.
finished, and I think they
Yeah.
just opened the last building of that when I moved here at the beginning of
No,
09.
I know, but I remember it was this,
Right?
No, I don't know, because I remember there was a period where they didn't have the funding or the construction didn't.
So
have the
that might have
funding.
been before that. I mean, it was
Possibly.
09, but I think they just opened their last building, I believe, and I moved here at the end of January of 09. So
Yeah.
the M had just opened when I moved here.
Have you guys been in the M? Have
Yeah.
you guys been there?
Oh,
Yeah, I've
What
been
do you
there a
guys-
few times.
You guys like the M?
That's nice.
You know,
like
I
the,
thought
like the
honestly
steakhouse
that
there.
between where the Strip is and the M would be a lot more filled in by now.
I thought so too. But you got the flight path coming in right
Yeah.
there between the.
But I mean, what a
south end of the
perfect.
Strip
I mean,
and
why
the
would you
north
not just continue more hotel? I mean, I guess
Yeah.
things got weird there with COVID, so
Yeah.
any kind of
But they
big
are
plans
building,
might have been.
They are building down southeast now, which they had deserted
Well.
back during the crash, and now they're going.
You're seeing spots all over that are starting to get filled in.
Yeah, so there's a lot of new residential going on down there
Yeah.
towards the M.
So this week we want to talk a lot about what's happening with the housing market, and we're going to talk with Doug. But let's get into first talking with Brett about what's going on in the crypto space, man. Is things moving up? Are they moving down? Like, what's going on?
Things are not moving up.
You mean it's not getting better? It's getting worse.
know what Bitcoin is right now? It's Debbie the Downer. That's what Bitcoin is.
Don't you buy when they're down though?
Yes.
Yeah.
So don't get me wrong. Now's when the money's to be made, but man, it's a 50-50 call. It could probably realistically get worse before it gets better. So I think it was 3 or 4 months ago before Bitcoin, because Bitcoin went down to I think 18,000, and then it went up to 25,000. When it hit 18,000, I think if you go back to the podcast, I was like, I think it's going to go to $11,000-$12,000.
Right.
And then it started going right back up to 25,000. Now it's back down to 19,000. It's dropped 10% the other day, went up 5% the other day, back down like almost another 10% today. So I honestly think combined with the economy right now, they used to be two separate things, right? It used to be a hedge against each other. And now they're not really a hedge against each other. They run in correlation. So looking at that and the way that it's going in that market, I think that it's just going to continue to go down. I think we will hit the 11 or 12,000. So overall, if Bitcoin 5 years down the road, to buy it right now is still a great buy. But cautionary.
Yeah.
You could buy right now, and that sucker could drop another 40%. So
why are the big swings right now? Because I know you want to talk about it, and you can ask that question too, Doug, or just your question. Why are these big swings happening in crypto space when you think people, if there's
people aren't
confidence-
putting money in it? I mean, it's like, why are there big swings in stocks right now? I bought a stock 2 weeks ago called Starbucks, not Starbucks. Starbucks.
Yeah.
They're an advertising company, media company, and I think Thailand.
Yep.
These guys had their IPO, and it came out the first day. It was $45. It's now $3.09.
There are so
and we're
many-
3 weeks later. So I bought that thing even on the third day when it was like $7, and it's dropped 80% in the past 2 weeks.
You know what's interesting about that is there's a lot of IPOs going right now.
Yeah.
That means that there's new businesses either getting in or they're going from the OTC.
Talk about what you mean by IPOs, because people want to
initial public offering.
Yeah.
Right. So what talk about?
So they
how
have
that works.
they have to raise capital. It's a way to raise more capital for the company, but there's all these requirements that you have to, and financials you have to provide, and all those, which is why there's different stocks. So Facebook, Google, they're a different stock than an OTC, which is an over-the-counter. An over-the-counter is kind of like, you could compare a lot to like a crypto coin.
Right.
It's anything goes. It's very much manipulated. Some of them are shell companies, and they don't even do anything. It's just there's not many rules and regulations compared to what you need to be on the NASDAQ and the regular stock market. So
it's not regulated
it's
as much.
completely a lot less unregulated as far as what you need to provide for financials and all these things.
Yeah, you got to be pretty heavily audited
which
to
is
get
why
into
that
the-
Starbucks surprised me so much, because that's worse than a damn OTC, and that's not an OTC.
Well,
what
I've been seeing though too is they do these reverse splits.
Yeah.
And on the IPOs,
I know,
and
there's lots of different ways you can do those things, but overall, it's kind of like, any financial instrument right now is not really performing well.
And it's not really a buy and hold market either.
What was it? Not Shopify, but what was the company today? Right after earnings, it's a major company. It dropped like 12%. FedEx. I think it was FedEx.
Yeah.
FedEx or UPS. I think it was FedEx.
Yeah.
Their earnings came out. Immediately, 5 minutes after closing, that stock was down 12 or 13%.
Wow.
Within 5 minutes.
Yeah.
So why is there no manipulation looked at it in that direction, but you're going to say that cryptocurrency and Bitcoin is? Overall, any financial instrument right now, I think, is down. That's why. And it was different when cryptocurrency, more specifically Bitcoin, ran as a hedge against stocks and the economy, but it's not doing that
instead
anymore.
of running with it.
Yeah, so the answer to your question is because people are selling and they're taking their money and they're putting it into cash just like they are stocks. That's why.
Here's what I'm thinking with the because the Fed wants to put out their digital currency, right? Mm-hmm. Then you got Bitcoin, you got a decentralized and a centralized currency, right?
Yep, right.
You got two. What I think is going to happen is the people that are savvy with the decentralized crypto, the Bitcoin, I think those people are going to get into it. I don't think the Fed digital currency is actually going to make it, because Bitcoin has the popularity and the decentralization of the.
I don't know. I don't know, man.
Yeah.
I think the majority. I mean, listen, if the government wanted to come out with their own digital currency, and Bitcoin is still early enough where most people don't grasp the idea of the relevance of why it's so important in this world, because they don't understand how they're being manipulated by any given currency that's provided by a government since the beginning of time. That's why.
Oh, it's all fiat.
So with that being said, I think most people's idea of a digital currency is that it's easy and it's quick to use and you can facilitate it over the internet and all those things. And that's what they really understand, and not so much the decentralization of Bitcoin, and more specifically the scarcity of Bitcoin.
Right.
And that's what keeps value up, is scarcity.
Right.
Because when you can make as much money as you want to, or you can print as much of anything that you want to at any given time, the value goes down with anything.
Yep.
And so I don't think people really understand the importance of Bitcoin because of that. So if the government wants to come out with their own digital currency, I mean, really all they need to do is get people weaned on that and have a whole new life where everyone's used to, just like now, everyone's used to using their debit cards. But I remember being a kid, first it was cash, then it was writing out checks.
Yeah.
And then what are you doing writing out a check? Use your debit card. Now, without even thinking twice, everybody form of payment is a debit card.
Right.
Well, once that transition gets switched over to a digital currency by the government, then I think they're going to do everything that they can to completely ban Bitcoin.
Yeah. I think
because now they've got everybody on board.
Right.
In a sense. But I think there's always going to be a market, and there's always going to be a place for Bitcoin, period.
Yeah, I think, because you've got some of these other countries that have gone to Bitcoin. Yeah.
I mean, I've spent many hours thinking about it, believe me. And I mean, it's hard to say, man, because what's happening now, and even 10 years from now, 5 years from now, there's a million things that could come into play and happen. So who knows?
Yeah.
Who knows? I mean, I think it's best for both fiat, the US dollar, and cryptocurrency / Bitcoin. I think it suits them both. I think it serves them both to work with each other.
Yeah, concurrently.
I think it's in their best interest for both to work with each other and find a world. And I think the world can have both of them, because the world's not ready to just switch over from fiat to cryptocurrency and Bitcoin. It's not. The systems aren't in place for it to be there yet. Mm-hmm. And I think for real group mentality to switch over, it's got to be something that's so seamless and so acceptable that you don't even think about it. It's just a natural transition. And we're not there yet with it.
So I want to say this. You guys are watching the French Workbench podcast here on a Saturday. So we're going to kind of dive into it. Brett, you have anything else to say about crypto, or are you pretty much...
A lot of things to say, but I'll save it for today.
Okay. He's just getting started.
Save it for later.
I want to move over. We're going to talk a little bit about what's happening in the housing market right now and what we see out there. So we know rates have gone up over 6%. We see a lot of things happening there. The Fed's going to raise the Fed's fund rate. We've talked about this in nauseam, as I always say. And I think a lot of it is because of the inflation numbers, right? And so in inflation, the economic standoff is happening right now with people out there where you have inflation and you have rates going up. So why does anybody want to buy a house? I understand, right? I understand the position people are in. I would question it myself. Now, again, though, if you look at where people are at mentally, sometimes it's not really about the numbers. It's not really about buying at the lowest part of buying a house. We talk about that a lot. So there is people out there still buying. We're going to talk with Brett about some of the challenges that he's talking with on some of his clients, what their mindset is on possibly waiting to next year. And then I want to bring up too, that when you look at buyers today, they're needing more assistance, especially if you're trying to get a house or a loan, because the average person out there that is, let's say, younger generations, Generation Y and Generation X or Z or whoever
Z
it is.
or whatever.
Yeah, those younger generations, they're not able to buy a home on their own, even with two incomes in some ways. So now you're seeing an uptick with people that are 55 plus, or not just people, but just family members mostly, 55 plus, coming in on these loans and getting people to support and help them buy these houses. What do you feel about that, Brett? I mean, do you feel that...
Well, we talked about this last year when home prices were escalating and people were paying $40,000, $50,000 over, and we're like, man, home prices are getting to the point where people can't afford it. And the conversation then was, what were people starting to do? They're starting to bring in family members and buying a house together versus just a couple. It's you now have 3 or 4 or 5, maybe 5 family members that are going in on the loan together. So now we're doing that as well, but a different version of it.
Right.
Now it's because interest rates are so damn high.
Right.
So home prices may have decreased to be a little more affordable, but now that interest rate rose. So now you're dealing with the same scenario, right? It was a $500,000 house last year. Will now only get you $350,000.
Well, I was going to say
that's crazy, man.
As the interest rates go up, I mean, that house gets more and more expensive.
That's what I'm saying. So it's like even if the house goes down 10% in value, so that's kind of where my buyers are, the thought process they're going through right now, which is I'm telling them, go by your scenario. If you need a place to live or you're looking for a place to live and to buy sooner than later, now's as good a time as 2 months from now, because you're going to be playing that game of, okay, I can take advantage of some good incentives. I can take advantage of some lower prices right now, but the interest rate's higher. If I wait, the home prices might go down, but then that interest rate might go up.
Yeah.
It may stay the same, but it might go up. Yeah. So now you're just whitewashing it. That's all you're doing.
Yeah.
So you've delayed 3 or 4 months to see what, even if interest rates went down a little and home prices went down a little, it's not going to be to the dramatic effect of home prices go down 30% and now interest rates drop to 4% or 3.5%. So now what's your difference? You've waited 3 or 4 months, 5 months to kind of see what's happening, which I completely understand. Taking a seat and just kind of seeing what's happening. But that's why I'm saying is you need to make the decision more on of what's your scenario versus am I going to try to maximize my dollar at the utmost that I can? Because at the end of the day, even if home prices were going to go down and interest rates were to go down, it's not going to be to so much of an effect where it's going to make that much of a difference. So I waited 3 or 4 or 5 months to save $20 on my mortgage payment, $30 on my mortgage payment. It doesn't make sense if you need a place to live and you need a place and you want to buy a place.
Right.
To me, it doesn't make sense. I'm going to buy that place or not buy that place over $30 or $40 a month. Yeah. I don't understand that.
Right. And that's crazy. So let's look at this numbers here, and this is what this chart is. This chart is showing that we're approaching, I think this was what, 2013?
Yeah.
Right? So you see this right here. This is 2000. This is how far we've gone up. This is a share of young adults 25 to 34 years old, borrowers looking to, for a co-borrower 55
looking
plus.
for co-borrowers?
Yeah. So 55 plus age group, right? That's actually getting on the loan with these younger buyers is what you're seeing.
That's when it was a lot more of a buyer's market.
Right here, right?
And then that's when COVID hit.
Yeah.
That's when it went crazy.
You're 50. How old are you, Doug?
57.
57.
27, punk.
27, right?
20, yeah.
So my question is,
to kick your ass.
Your kids, man. Your kids are going to grow up. They're going to want to know about maybe getting into buying into a house, right? And are you going to be, are you feeling like you're going to have to help them out?
They're just going to buy them the house, right?
No,
Cash?
No.
Why not?
Because I didn't pay for their school. Why should I buy their house?
You don't want to. You want to make them wait. You want to make your kids work for things in life?
Yeah.
Like earn it?
Hey, and they've done it. 2 of them actually.
Well, hold on. By doing that, they might actually appreciate it.
Oh, you never know. You never know.
They'll actually appreciate what. Let me say your kids will actually appreciate what they have then.
Well,
that's a crazy concept.
Yeah, I got one kid that told me he went up to SUU and he's trying to get his aviation science degree.
Yeah.
He goes, Dad, I don't want any help. Because I'm going to do this on my own.
See, let me say this though. Okay,
is he doing it just because it's his will, or is he doing it because
he wants to
screw
do it?
You, Dad?
No, he wants it. He's
cool.
He put 3 years in at UNLV, and he wanted to get his pilot's license, so he went up to SUU and got accepted into the program, and he's going to figure out how to get the funding and scholarships and the grants and all that other stuff on his own. He's 24, so he should be able to do it on his own.
See, and they say beating your kids doesn't work. I'm just kidding, everybody. Doug's a great father.
Well, let me say this though. I want to say I'm not going to say that there's not some true to what you said. There's not some true things that you can say, like some of the things you were bringing up there is trueness to some of the ways of people appreciating things, but I also think there is kids out there that, the way they grew up or how they were raised by both parents, if you had both parents in the family or their household, that it's not that they wouldn't appreciate that. Maybe they want to get ahead in life, or maybe they just want to have a little support to at least get started. I'm not saying that they shouldn't earn it on their own, but I mean, there is.
Dude,
some kids out there
I get that. Listen, when my wife and I bought our first house back in 2004, we had no help, and it would have helped my life out so much if my parents could have helped with a down payment. Like, not pay for the house, not do whatever it is, but just to help with like a down payment or something like that. Yeah. And I was by no means a spoiled kid. I've worked for everything I've had my whole life. So yeah, I mean, don't get me wrong. That helps, and I'm all for that. It's the difference between I'm paying for everything for my kid for their life, and I'm going to give them a little bit of help because I never got that from my parents when I bought my first house. So if I can do a 5% down payment for them, and it helps their life get going and less in debt, I'm all for it.
Yeah.
I'm going to say this. So there's a lot of, and Doug, you could talk about this too, is that I feel that there's a lot of opportunity when you don't get help, but let's look at some of the other, cultures that come to our not just our city, but to America, right? Mm-hmm. They all pull together in a lot of ways, and they pull their money together, and they try to give everybody a start. Again, I'm not saying just to hand the keys over, right, to these kids, but I'm saying maybe sometimes it's good to try to give that foot in the door, that head start, or that little support that would maybe help them down the road. Yeah,
there's a difference between spoiling your kids and not having them learn life lessons and giving them everything and helping them out. There's a huge difference.
Yeah. I think, I know what you're talking about, because when I was in Southern California, got out of the Marine Corps. Mm-hmm. These two Vietnamese guys had a whole family over in Vietnam that they were trying to break up. They were working. One had a computer store, a business of some sort, computer repairs, and the other guy was running a laundromat. And they were working on that to get their family over, and then when their family one at a time, they were all living in a
one at a time. That's how they did it.
One at a time, and they were living in a 3-bedroom house, and then finally when they got all of their family over, there was probably 6 or 7 of them in there at whatever point. But then they all started working together to buy another place. And
let me tell you something. You want to talk about someone keeping their nose to the grind? Yep.
Yeah.
Come in, nose to the grind. Not complain, get done when you need to.
And it seemed like they knew our system better than I knew it at that time, because I was trying to go to college, and
because they've probably all come from a broken system.
Yeah, absolutely.
Talk about appreciation. Yeah, we don't even know here.
Yeah, I know.
Well, look, like I said, there's nothing wrong with some I wouldn't say hard love or hard, a position where you got to strengthen your child or your kids and just make them get ready for life, right? Because life hits hard, right?
Yeah,
and you got to maybe toughen up, give them a callus a little bit. But I don't know. For me, I feel like you got to look at things that work. I'm not saying there's got to be a balance, and I think that's to everything in life.
Well, that's
you don't give too much, but you got to give a little, and that's just my approach to it.
I mean,
I want to say this: Americans, I feel that a lot of our society is like, hey, go out and do it on your own, work hard and do it. There's nothing wrong with that, but sometimes it's like, man, you're working yourself to death, where by the time you get to where you want to be, you've earned it yourself, but it took you 35, 40 years before you actually got to that place, right?
That's what I'm saying, is there's nothing wrong with, there's a difference between spoiling your kids and helping them out, and to me, if you can help your kids out when you can, do it, because the world will take care of the rest.
Well, that's the scenario you just talked about, Dan. That's right where I fit in. I mean, I got out of the Marine Corps. I had to put myself to college. I had to get myself going in life, and there was no
Same thing with me. Yeah,
it was like it took me probably a good 25 years to get to the
before
point
you kind of got your head wrapped around of this is what I need to do to dude, I know.
I think each generation shouldn't be like where you just give them whatever, like, because then you won't appreciate it. But I think it should get a little easier. And if you're passing down the information, So again, if you're looking at this and you're saying, well, why are we talking about it? Well, it's because a lot of these kids right now, or these younger generations, 25 to 34, they may need that support. They may need help to get into a house today. They didn't make up the inflation or the problems we're having. They didn't create all these issues that's going on in the housing market. So that's
percentage?
Yeah, that's the percentage. So,
but I'll be honest with you, 4%, that's not squat.
As far as what?
Out of all the kids between 25 and 34, only 4% this affects?
The purpose of this, though, listen, the purpose of this
that's
graph,
not really an impact on their generation, though.
What it's saying, though, is that you're saying this graph is saying that more people 55 plus have to jump in and help out if somebody wants to buy a house. Is what the whole purpose of us saying.
No, I understand that, but I mean, it's all relative. It went from 0.5% to 4%. Not like 30% of the kids these days need help from 4%, dude. I mean, that's a hard sell for me. Yeah. I'm just being honest with you.
Well, I think it like this, though, man, is I think that this could potentially keep going up. And you're going to maybe start seeing this. The reason that we bring this up is, could we see this?
Maybe the beginning right now.
Exactly. Could we continue to see this happening where this keeps expanding? Right?
Even double, 8%'s not.
Well, if you get into a scenario like we had, like when I went to first buy a house, they had houses. I bought my first house for $98,000, but the interest rate was 10%. I'm paying just as much on that house as I am on the house that I'm in now on a $400,000 mortgage. So the interest rate has. I mean, something has to give there for the people to be able to get into it, or you're going to see.
I agree 100% on that. I mean, I'm not advocating for 10 or 11% interest rate and these poor kids, they have nothing. I'm not saying that.
No,
so everyone out there, calm down, internet land. I'm not saying that.
I'm really taking this.
Oh my God, I can see people. That son of a. Like, calm down. Someone's wrong on the internet. Oh my God.
I love it.
I'm just saying that. 4% is,
Hey, I just want to know what's in this thing right here. I'm trying to
what's cocaino?
Cocaino.
Booger sugar.
All right, let's keep moving on, man. So we got that off our chest.
Booger
let's
sugar.
Go to this next. So we know that mortgage rates.
I'm just saying 4% is. Don't get me wrong. It's still more than 0.5%.
If we don't recognize the problem now, it would become a major.
So
problem
I agree with you on that, and I'm not saying that it can't be a lot more of a problem. I'm just saying right now the 4% kind of shocked me because I thought we were talking about real numbers here.
Like 40.
Can we move on to the next topic, please, gentlemen? Is that okay?
Sure, I guess. Hold on. Okay, go ahead.
All right, thanks. I don't want to keep talking about that.
No, it's all good.
All right, so listen, I'm
just pissing people off over here. No big deal.
I mean, that's what you do best. So, anyways, let's go back over here to look at the mortgage rates. So we've seen that it's over 6%. Now, look at everybody's like, well, what does this mean? This 0.8 in fees. That means on Freddie Mac. This is Freddie Mac's website. That means it almost cost you a point to get into this house with a 30-year fixed mortgage, right? And so look at how much this has gone up. Look at this graph.
So what do you mean it cost you a point?
So that means if you
get that loan, you're paying 0.8 just when you close on it towards the actual loan.
If you have a $500,000 mortgage, it's roughly going to cost you about $5,000 to get a 6.02% rate today.
Gotcha.
So it tells you that, look, rates are going up. This is why people are taking a step back, and I get it.
Yeah.
And this is why you're seeing people having to 55 plus come in because, like you said,
so to put in context for the consumers out there, you're saying that it basically cost you $5,000 to get an interest rate at 6%, right?
Correct.
So when interest rates, say we're back a year ago where interest rates were at 3.5%, were people having to pay anything extra to get at 3.5%?
No, that was our par rate, right? That was the rate.
So why do you have to pay $5,000 to get that rate now? That's not the rate now. Then if you got to pay $5,000 for it,
it's the way that the bonds are being traded.
I know. I'm just trying to get consumers.
Absolutely. And then the investors out there, they buy into these bonds, right? So what they're saying is that right now it's a higher risk, and so since the higher risk,
so that's why it costs money.
Absolutely. The pricing changes all the time, but you also think that rates are going up and you got mortgage-backed securities.
So it's bigger risk, yeah.
It's just a risk factor.
So that's
right?
I love it when you explain things like that because a lot of like consumers don't really understand when you're saying these things. So when you break it down like that, if I can understand it, they can understand it, so that's why we kind of go about it that way.
In the loan industry, are you seeing many arms come through?
Yeah, I'm locking in more arms, and I've seen people lock in more arms today's world than I've seen any time other, right?
Really?
Yeah, so like what I'm saying is that I've seen where clients that I know, they go and they talk to people and they're like, yeah, man, I want to, what do you think about this? And I can give my advice.
Yeah.
And ultimately they end up taking, from whatever loan officer, they're taking the ARM loan. They're taking because sometimes it's cheaper to buy the rate down.
How long's the ARM for?
The ARM for, it depends. It could be 5 years, it could be 7 years, 10 years. It's fixed for those many years. But the feedback I'm getting is that with a lot of these loan officers, it's cheaper for the consumer to lock in with them on an ARM loan than it is in, say, a fixed rate, just because they're pricing out better based upon what I hear, right? So again, it just depends on every loan officer out there, and clients' feedback from me when they go talk to other people. That's what I'm hearing.
So what, they're going to refi in less than that 5 years or 7 years?
I don't know what they're going to do. I mean, so let's say.
So this. Like I know it's because you're doing it for a cheap interest rate right now, but then that's going to then what? Like what are they going to?
You got to think.
What are they looking to do?
If this wave continues to happen, then what's going to happen is yes, people are going to lock in on a higher rate, and I think that refinances will come back. We know, like I said, and this is why we're talking about it, is 83% of refi applications in the mortgage industry is down year over year. 83%.
Yeah, why would you refi right now, dude?
Cash out.
Good point.
HELOC. Maybe you want to pay off debt.
I'm talking
There's always a motive. Look.
Okay. Other than I get that. So, and for reasons that you need that cash. So I get that. I'm just talking about if it wasn't for something with that, like why would you? What you wouldn't.
What do you think about, Doug? I mean, these rates. I know they don't scare you, right? These rates.
No, from my first.
He's a Marine. Nothing scares him.
My first interest, my first loan was like 9 or 10%, and then we had to put PMI on top of that.
Jesus.
And it was.
So you had a 90. That was on a $95,000 house. So what was your mortgage payment with the PMI and the interest rate that high?
And SL, what do they call them? SIDs or SL?
Yeah, SIDs and lids.
Yeah, SIDs and lids. Yeah, the entire payment.
What was your total nut on it?
$1,600 a month.
Holy shit! This is when?
This is 96.
Wow.
Yeah.
Damn,
yeah.
bro. Yeah, this doesn't scare you right now, does it?
No.
So, going out there and you're seeing all these properties and want to kind of keep moving with the rates, we're out there. We're doing video tours, right? And you're doing stuff out there. And we see that a lot of builders right now are offering a lot of incentives, yet we're still not moving the needle as much as people thought it would, or at least the builders thought it would. So, again, I said rest in peace builders for temporarily because we have too many homes on the market.
I think they'll be dealing with this until the beginning of next year. Next spring, they'll probably be at a level with things and balanced with things, I think.
Yeah.
Or a little, or closest that they've been. Because I think that when COVID was going on, they were everything was unbalanced, and then the market dropped out and that continued on.
Just think about the things that are going on, all these challenges. It's like a huge storm going on. You got rates going up, inflation's high, the Fed's going to raise the Fed's fund rate again. You got builders stuck with properties offering incentives that they can't get rid of these houses. And then you have buyers out there just sitting on the sidelines knowing this is an economic standoff, like we said, with rates and with inflation. And
consumers right now are like at a tennis match. They're like,
That's
it's true, man.
Watching the volley back and forth.
Yeah.
I might.
It's in your
step
court.
a foot on the court one of these.
Yeah, it's
days.
in your.
Oh, good shot.
So let's kind of dive into this. So we're going to talk about the real estate market now and some of the data. And I want to bring this part of it up. And let's go ahead and talk a little bit with Brett, and we'll talk a little bit about what's happening out there. So Brett has brought to our attention some of this data that came out from the MLS, Las Vegas Realtors, right? He sent this out. So, Brett, go ahead and talk a little bit about what you see here.
Just so you know,
on the top
I only use facts, and sometimes I've noticed lately in our podcast that our facts make people angry. They think I'm completely wrong, even though I'm speaking facts. So, just wanted to put that out there.
Well, Brett, sometimes people just want to press buttons.
No. We're realtors. We're dumb. We don't know what we're talking about. I get it.
All right, let's go ahead and talk about what do you see here.
Anyways,
Go
I had
ahead.
a little animosity built up on
That's
that
all
one.
right. Go ahead. I guess so.
I don't comment. I just say it on the damn show.
Right? Yeah, there you go.
So, what do we got here, Dan?
Go ahead and talk.
Change from August. From
40
last year, number of available units for single-family residents up 40%.
Wow, look at that right there.
Ooh, average list price of available units
This right here
is up 4%.
Yeah.
But you can't really use that because last year things were going up every single month. That it's like, okay, that's still up 4%. But say that we're actually down 15% because that's taken off a 20% that went up. You know what I'm saying? So we could still be plus 4%, but that doesn't really mean shit because, So availability for homes is up 145%.
Isn't that crazy?
Change from August.
So what does that mean?
That means that there's more properties on the market.
Yeah, there's 145% more properties on the market now than there were.
145%.
That's absolutely insane. But I mean, you know, like number of new listings is only up 0.6%. Changes from August.
So how long are the homes staying on the staying on
the market?
Yeah.
So let's look at August 22nd right now.
So let's go here.
So there we go.
Right here.
All right. So July, the average home staying on the market between 0 to 30 days was 83%. It's gone down, and now homes selling in the first 30 days are 71%.
Wow.
So, you know, I got to say, though, doing this long enough that still selling within 30 days is pretty damn good.
That's good.
I mean, you know, the difference is that's not all truthful, though, because there's price drops that are happening in there.
Sure.
And I don't think they're taking that into consideration of, it's selling within 30 days if you drop it a couple times, but you got to drop it a couple times to sell it. So,
right.
you
Does
know,
that,
that's
does
what
that
they're...
include the time that you go into contract? Like when you go into contract on a home and you say
correct.
due diligence and all that?
Just like if you get, say you put a listing on the market and you're 15 days in, you get an accepted offer, and then you're a week into it and the contract falls out because of whatever it is and the buyer backs out and it goes back on the market, then it's technically been on the market for, 45 days then or whatever it is. So you include those,
Well, I know a lot of agents are given a 15 to 21 day due diligence now. They're given a longer due diligence. So that could be part of your 30 days on the market too.
So like I said, I mean, you know, and plus I think you're starting to see sellers that kind of understand that the high prices are gone now.
Yeah.
And you're not going to get the most for your house right now, and they're kind of accepting of that. So
let me say this. Some of the selling tactic right now is this, and this is kind of what I was thinking about the other day, was that when you make an offer, you have a buyer. So when I'm making offers, whatever you're making offers, you're out there and you're saying, okay, well, let's get closing costs. Knowing that if you offer or ask for closing costs, that there's a chance that these appraisers are going to be conservative on the appraisal with the dropping or how the prices are dropping. So you're going to look at it and go, well, we know it's going to come in low, but you've already secured those closing costs, right? $10,000 or $15,000. Is that a tactic you would use?
What do you mean? Go back and then ask for?
No, like when you negotiate in the beginning, you write it. It's already there up front and say, hey, I want 15 grand, because you got to think that.
So basically, we're writing an offer at, like, say the house is $500,000, and say we write it for, I'm just using these for numbers.
Right.
Say we write it for $490,000, but we're asking for the seller to pay $15,000 on top of the $490,000, and you're asking them to pay another $15,000. They're still the buyer's still going to pay $490,000. They're just not going to pay that $15,000 towards their closing
but here's
costs.
where you get protected is that what if so let's say it comes in low, right? The verbiage in that contract.
So then you go back and renegotiate. So then you go back.
Do you want to? That's the question. Like, you're securing the closing costs because everybody's out there looking for the deal.
Well, I would advise my buyer. So here's the thing.
You see what I'm saying?
It's
because this.
Listen, the whole point of the seller paying the buyer's closing costs is for the buyer to save $15,000. If the buyer now has to bring in the difference between appraisal, seller says, okay, we're still going to pay for your closing costs.
In this market, though, will they do that? See, here's what I'm trying to say.
Will they do what?
Well, so this is a buyer's market. We know that there's tactics and there's ways of getting things accepted, just like in the seller's position. And so if you come in and you say, hey, I'm going to give you $15,000 as a seller, right? I'm going to give that to you.
And then it appraises lower. Yes, I will try like the Dickens to then go back to the listing agent even more and say, listen, I know the seller's paying 15 grand of their closing costs, but the buyers want to don't want to bring in the difference because then it washes out what the seller's paying
Here's
for.
the difference, though. If the seller's motivated and they know that there's 11,000 homes in the market across the, all of the homes that are listed, over 11,000, why would the seller not go down another $10,000?
They should.
They should.
So that's a different question.
Because look, appraisals are coming in lower because the market is depreciating, and I think that's a tactic that people should look at.
Yes, absolutely. I mean, here's the way it normally works anyways. The way it normally works, which is if you have an appraisal that comes in lower per the contracts, buyer and seller goes back and renegotiates. But if you sold a few homes, you have these conversations with the listing agent ahead of time saying, okay, we're right on the edge here. If this happens, would the seller be willing to do this? Okay, seller's willing to pay $15,000 the buyer's closing costs. But if this happens, what's the seller's position on it and things like that? So that's the reason why I have those conversations ahead of time, just so that if that situation happens, it's not unfamiliar territory.
Right.
It's because like say it's a $500,000 house and the appraisal is off $5,000, $7,000, $8,000, something like that. 9 times out of 10, the seller's going to say, "Okay, forget it. Let's just sell it." And
but then if it comes in 25,
but if it comes in $20,000, $25,000 different, then you have real issues because the seller has a different number in their head. Period at closing.
Right.
And that's such a different number than what they have in their head to what they're willing to take that usually creates a huge issue.
Yeah, but let me
now,
say
if you're
this.
talking about $25,000 different appraisal on an $800,000 house, that's not a big deal.
Let me say this. So yeah, it does price a home that makes a difference. If you're in a $1.5 million home, you're negotiating hundreds of thousands of dollars, not negotiating $1,000 or a few thousand dollars.
5,000 or something, yeah.
But you got to think, the seller had what they wanted with all these buyers over the last couple of years. It is completely flipped. Don't you think buyers now know that they have these sellers over the barrel right now, and they can pretty much ask or get, for the most part, almost anything that they want? Because you have so much competition and there's so many things to choose from now. You have to really stand out. You rather have a house that has...
So if you want to sell your house right now, yes, you need to be aware of what your competition is in order to sell it. However, overall, there's not that many homes where every new seller that comes on the market is like, man, I'm totally raked over the coals here. I need to give the buyers exactly what they want. This goes back to the sellers. 53.1% of the sellers in Las Vegas having more than 50% equity in their home.
Yep.
Which is they don't need to do that. So unless it's a scenario where they need to get the hell out of Dodge or they need the money for something or whatever it is, they're in a position where, hey, I'll sell my house when I feel like the market's right for me. Or they're definitely not in a position where every seller coming out now needs to absolutely do that.
I think it's going to keep coming down. I think we're just about halfway there, maybe even not even halfway, where the market's going to keep coming down. Why not?
So what do you mean?
So what I'm
halfway
saying is,
to
what I mean is as far down as we're going to go, we're already down about 8 to 10%. We probably have another 10% for declining on prices. I would say,
Probably.
You know what? I would say, why don't you just
that's
count
fair, I'd say.
Why don't you count your losses now? Because it's probably going to continue to go down. At least it's going to go down. What are you going to do? Wait another 2 months and say, we waited. And,
I don't think there's that many people in a position that need to sell between now and anytime soon.
No,
that's what I think.
But I'm saying this: if you're going to take the effort to go out there and list your house, there is some motivation there.
Yes. So if you're in a position, like at the end of the day, selling your house in the last year is strictly a cash reasoning is I can get a hell of a lot of money for my house. Now, if you're selling your house, it's a situation. It's a situation where you need to move or you need the money or a family, something's changed in the family, you're divorced or something like that where you need to sell. So I think that number of sellers is far less than the number of people who absolutely need to sell their house right now.
Right.
And so when you have a demand of sellers that need to absolutely sell their house, then they'll flood the market. Then they'll do whatever they have to beat the next guy to get their house sold right away. Yeah. But we don't have that.
So we're running out of time here. We got to keep moving. I'm going to get Doug on here. Doug, I want to talk with you about Pahrump and Laughlin. Talk to us about what the markets are out there. And I want to give you a good time here to talk about what you deal with some of these houses, because you go out and do a lot of home inspections. You do a lot of things out there in the markets out there. What's really different with that housing market, say, than Las Vegas, right? Because I know you do home inspections almost, a lot of these cities, right? I mean, Pahrump, I don't know how far you go north. Talk to me about Laughlin. Talk to me about Pahrump.
Okay, so Laughlin is more of a kind of a vacation type town. You're looking at these 4-story condos that people come in from Arizona, California, and they get into these condos, and then they use them as a vacation place. They are building new homes out in Laughlin right now. They've got quite a few new homes, actually. They're building them with RV garages, which I've done a few.
Smart.
Yep. And because they can get their boat and they can get their RV.
No, I get it. Yeah.
Yeah. So I've done a few of those. So Laughlin's kind of a unique town. I mean,
how big's Laughlin?
As far population wise,
yeah.
God, I don't
Ballpark.
know. Yeah, maybe
10,000, 20,000.
I was gonna say
40,000,
maybe.
Okay.
Yeah. Because you got a lot of condos, you got a lot of 4-story condos out there, and then you've got some new homes and stuff. I mean, it used to be a 15,000, 15,000 population, but. And so Laughlin's kind of unique. It's got the river, so you got a lot of people that like the river. Yeah, those are the people that are moving there. I see a lot of ski-doos and boats and jets and stuff like that.
What are the homes though? Like, what are the homes like quality out there, and how old are they?
Okay, so the oldest one I've done out in Laughlin has been like from the early '80s. And
that's the oldest one.
Yeah, but not saying that that's the oldest one. That's the oldest one that I've done. Yeah. And I know there's there's probably some older ones out there. I haven't been in that part of town, but the newest. I mean, they've had brand new builds there to 22. 2022, and so they've got. A wide range of homes. It's they've got 2-story, single-story, customs, stuff like that. So Laughlin is Laughlin. It's kind of a quiet little town. Little playing on the river, playing a little golf. You got RV down there. Yeah. Now you go out to Pahrump, and Pahrump's a whole different kind of scenario now.
Oh yeah, it is.
This past week, I just did a house out there. I think it was I forget who it was, but anyway, a builder put in 2-story homes out there. Now I know in the past they've had these apartment complexes or 4plexes, 6plexes, that kind of thing out there, and they've been a 2-story home. But this is actually a residential community now. That it's Beezer, I think. Okay. That it's all a. It's all a 2-story community, and they got a single-story community right next to it. So, the one thing that I asked the agent to do was to give me since my background is actually geotechnical engineering and whatnot, I asked her to give me a soils report because I was just kind of curious of what they found and what the soils were like in that community. And so I haven't gone through it yet, but I'm going to go through the report, and they've got it's a completely. Everything's 2-story in that whole community.
Go ahead.
Oh, and then you've got the other side of the coin. Now with Pahrump, you've got the soils issues. A lot of people buy those manufactured homes and trailers.
Is that a big market out there for manufactured and trailers out there?
Yeah,
really? It is in Wisconsin.
Oh yeah,
really.
And I had a realtor. She actually moved back to Tennessee, but I've been working with her for like the last 12 years, and I would say 80% of the homes that she sold or that I went and did the inspections on were probably manufactured homes or trailers. And the thing with those is the soil conditions out there. You can actually adjust the. What they do is they adjust the pedestals that the homes sit on. So you're going to get cracking.
Is it blocks?
Well, you get some of them have got blocks, some of them got steel pedestals, but adjustable steel pedestals. So what happens with the manufactured homes is you do get cracking in the walls, your ceilings and stuff like that. But you want to make sure when you're looking at that kind of stuff, you want to just make sure it's in the cracks, in where the walls and the ceilings intersect, that kind of thing. Because if it starts getting into more than that, you got like these big old horizontal, vertical, lateral cracking or whatever. You have a little bit of you have a different scenario going on there. You could have some settlement going on, but in any case, there's a lot of manufactured homes out there. I haven't really come across too many that have been in such condition that stay away.
So, off the record, what's the bunny ranch like? I'm just kidding.
Well, I was going to say this.
I thought I would get a giggle out of that.
No,
one,
I'm going to say this.
Everyone just kind of looked at me like, this guy always says the weirdest shit.
I would think that Doug would have to bring his wife because he's going to Laughlin. He's going to the.
Yeah.
You know what I mean? Because, dude, that's all a party.
How do you know he doesn't?
Well, no, I'm saying she wants to go because, Doug, we know your stories.
Vegas,
man.
baby.
Vegas. Doug's got some stories, man. I'm sure he's got stories in Laughlin. Doug, talk to us about Laughlin. Yeah. You have any stories in Laughlin?
No, I don't. Actually,
no,
none. I'm down there back in Vegas.
Do you have anything else to say about this, Doug?
I was just gonna say, and then Pahrump. So you've got the stick frame houses, you've got the manufactured homes, and now you've got 2-story homes out in Pahrump. Beezer's putting in a whole subdivision of them, and the big thing is I just had a guy ask me the other day. He was going to move to Pahrump. He wanted to put a pool in. I advised him it was an in-ground, like a pool that you would find here. He was not he wasn't familiar with Pahrump.
Right.
And so what I told him was that he needed to get with a soils guy before he did something like that, because I've seen pools that are actually settled, cracked, and foundation issues that have resulted from the pool into the house. So
that's not good.
No. It's just the soils are so they don't.
You just got to have someone there. They're
not
to be specific soils with that soil in your land. Yeah, I gotcha.
Basically, the only way that I can think in my mind is if somebody really, really wants an in-ground pool, is to over excavate, find out where your limits are, over excavate, backfill, and then dig your pool, and then you should probably be okay. But that's cool. That's just going through my mind and without drilling or digging or anything like that. So,
all right, Doug, we're running out of time for everything here. We're just an hour went quick. So, Doug, how can somebody get a hold of you real quick?
lvhomeinspections.com or 702-806-5280.
All right, Brett, you have anything else to say, buddy?
Nope.
I mean, you said a lot today. So. I mean, are you going
crypto, real estate, complaining, the whole 9 yards, man.
Are you coming off your crash right now?
Yeah, I made it a full podcast.
What was that drink called?
Full send.
All right, guys. You guys know this is the most real behind-the-scenes information, financing, real estate, money talk, entrepreneurs going on in Las Vegas. I'm your host, Dan French. Also, one last thing is if you guys want to check out a website, LV Home Professionals, check that out. And we'll see you guys on Tuesday. Hopefully you guys enjoyed the show. We'll see you then. Thank you for watching the French Workbench Podcast. You can find us here every Tuesday at 6 p.m. and Saturday mornings at 10 a.m. to find out all the information on real estate and financing here in Las Vegas. Also, check us out on our LV Home Professionals website. You can find your future home there, a lot of good information, and you can find us on audio-only options through SoundCloud and iTunes.